You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again. It's Friday. Means it's time for Volatility Views. My name is Mark Longo from theoptionsinsider.com, and it is nice. It is nice to be back in the old Chicago studio. Of course, we were down for the Options Industry Conference last week, so we did a lot of great content. It's still hitting the network now, so hopefully you guys are enjoying the slew of content and great guests we had for you. And then that wasn't enough. We came back to Chicago and we're right back to work at another conference here locally. We were producing a lot more content there, so that's all hitting the network now as well. So I haven't been in the studio too much in the past couple of weeks, so it is nice to be back in the old cozy environs here in the nice downtown Chicago. Not that I don't mind Miami and everything else, but audio-wise, it's hard to beat the mothership here. And, of course, you guys know how to get us every Friday, 1 p.m. Central, 2 p.m. Eastern, via the Mixler or on your podcast device of choice, whenever the heck you feel like listening. We don't judge. And however you listen, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We do. Yes, indeed, we do like to hear from you guys. And joining me on the old program today, holding down the MIAX hot seat, is good old Shelly Brown, the Executive Vice President over there at MIAX. Shelly, welcome back to Vol Views. Have you recovered from OIC, sir?
Good afternoon, Mark. I am almost recovered. It'll take a full week, I think.
At least to get all that sun-drenched Miami out of your bloodstream, get you back to. Well, you guys have Miami in the name.
I always have Miami in my blood.
That's true. You have Miami in the name, but you're kind of based in Princeton, so it's a little bit of you get a little bit of both.
Yeah, Miami at Princeton. Yes.
Yes. Miami.
Yeah. Now I always wondered that these guys that your founders went to like Miami, Ohio, or they're from Miami, Ohio, or they like just love the Miami Dolphins. Where did Miami? Well, I want you to first off, everyone to know. This is not unprecedented. For instance, the Cincinnati Stock Exchange is located in Chicago, and
Box is in Chicago, for God's sakes. The Boston Options Exchange,
right? So, just because it says it's a city doesn't mean that it's actually in that city. But where did the Miami moniker come from?
The original plan for the original iteration of the exchange was to be an equities exchange headquartered in Miami with the primary purpose of listing Latin American securities in the U.S. That is still in the cards for a future. We do have offices in Miami. We have a presence there, but our primary focus is Princeton, New Jersey.
So you wanted to basically be kind of the ADR kings of South America and Latin America as a whole. That was the original plan. and you guys were gonna enjoy the nights along Miami Beach and hang out and trade stocks. That doesn't sound like a terrible initial plan. I'll be honest. I like that plan and question why you guys got away from it. Simply for the weather.
The primary reason we got away from it is Miami is not fat guy weather, and I'm a fat guy, so therefore I'm not moving to Miami.
a healthy and robust fellow is how we put it here on the network. To your point, though, Mark, I'll never forget the first time I really met up with the Box people way back after their launch, the Boston Options Exchange, and they gave me the number to contact them for set up an interview. And I looked at it, and I said, "This is the 312 number. This is a Chicago number. Why am I calling? You're Boston." And I was flabbergasted at the time. Like, wait a minute, you're the boss. It's in the name. Ever since then, nothing surprises me when it comes to this.
No,
let's get. Sorry.
I was going to say, I believe their actual slogan is Miami, not for fat guys.
Well, let's deal with the reality here. It doesn't matter if the exchange is in New York, Chicago, Boston, Philadelphia, San Francisco, or Princeton. Every option and equity electronic execution is done in North New Jersey.
Yep, it's all in Mahwah and all that area anyway. So I guess in the end of the day, they're all in the Mahwah exchange.
Exactly.
What we should do is buy up a plot of land, incorporate it, and call it Miami, New Jersey.
There you go. Are you willing to?
And then we'll make Shelley the mayor.
Are you willing to pitch in? Then you can buy the first plot.
Shelley will be the mayor. It'll be awesome. He'll be like, then we could literally start calling him the mayor. It'd be amazing.
I like that. I like that idea. I'm behind it, sir. Well, Mr. Meatball, sounds like he's in a tin can. That is, of course, Mr. Meatball, Mark Sebastian. Didn't even give me a chance to introduce him from OptionPit.com by way of Carmen Line Capital. He's working his way back to the worldwide HQ, which is why he sounds like he's talking to us like a tin can through Sing. But we'll get him boosted up to a nice, good connection in a little bit. Meanwhile, we're going to keep on rolling. There's some vol out there. I don't know if you guys noticed this. So let's get into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is the portion of the show where we break down what the heck is going on out there in the markets. And this is another one of those days where it proves why we don't prep for this show too far ahead of time, because you just can't. You just can't, because the market is a cruel and fickle mistress, and anything you do, it will yank it all away from you at a moment's notice. And that's pretty much, we're seeing kind of a bit of a repeat of what we saw yesterday playing out today. Of course, this was the week where the administration decided to kind of out of the blue on this weekend, everyone was hoping and praying and thinking, a lot of the market had really priced in that the trade war was kind of behind us. And then coming into this weekend, Trump said, yeah, not so fast. Things aren't going as well as perhaps you hoped, and we may ratchet up tariffs as a result. And that's where we find ourselves today, ratcheting up more tariffs, a lot of back and forth, saber rattling, that sort of thing. Market tends not to like that. We saw a lot of sell-offs earlier in the week. We saw a pronounced sell-off yesterday on the specter of today's return of tariffs, and then it kind of mitigated itself towards the end of the day. We saw something similar today. Actually, strangely enough, the day started off up overseas in Asia, a day when we announced our tariffs. Usually the Asian market, the Chinese market, had been hit the worst. They really took a drubbing over the course of the week. They actually rallied today, which maybe was the first sign that things were going to be kind of interesting today. And then, of course, today, most of the major indices, a little bit earlier than before the start of the show, were off about 1%, if not more. And then here we are coming into showtime, and most of that sell-off is pretty much gone. S&P pretty much unched. The Dow pretty much unched. NASDAQ off roughly 0.25%, but they're probably going to get into the green before the time the show is even done. And we saw a similar pattern out here with the old VIX Cash. Yeah, it spiked. It spiked yet again in the morning. Spikes, pun intended, and also saw that with the spikes as well, where they both spiked. It's hard to say spike with the two of them. I'll have to figure out a different word for the two of them. But both spikes and VIX spiked today, both of them hitting over 20. And then coming back off, seeing spikes coming off a little bit less. VIX right now at about 1690 or so, off actually on the day, about 2.25 handle. So getting up as high intraday as about just a little bit north of the 20 handle, about 2010. I know spikes got a little bit higher. Let's see, intraday spikes got up to this is actually yesterday. Yesterday got to 2294, and then today, but we were over the 20 handle again today briefly. Let's see, 20, actually about 2020 as well, so not as much higher as I thought. And then coming off again right now as well, down to about 1734 today. So another one of those days where if you wait 5 minutes, it's the old joke, right? You don't like the weather, wait 5 minutes. This market, if you don't like the market, you don't like the volatility, wait 5 minutes, and you're going to get something entirely new. And that's kind of the spectrum we find ourselves in today. Lots of fascinating stuff going on here. Maybe, Mr. Meatball, we'll start with you. First off, are you back in the Worldwide HQ yet?
I'm in our satellite office in one of the 10 towns that changed America. Beautiful Riverside, Illinois.
I can actually hear you. How nice is that?
Isn't it lovely? So, I want to say today in particular was really strange. We were down, 43 points. So we're down over, almost 1.5%. The NASDAQ down near 2%. Apple down like $7. And what we saw happen was, the spike index and the VIX index did absolutely nothing. I mean, it was really the peak of the spike in the VIX, with us down 43 handles, was up about 0.8% of a percent to about 20. There was no lift in the VIX futures, no lift in the synthetic spike future, and then lo and behold, vol absolutely collapsed, and now we've got the indexes are flat, probably going to go green today, and the and all we've seen is vol fade. It's interesting. You got to wonder whether really all we needed to hear was that they've not totally collapsed, and we're going to keep talking. And that's it. It was really kind of fascinating, the news. We were talking on Monday on Option Block. Basically the market had said, oh, Trump's just tweeting and, he's upset about something. He's trying to force the issue. And then on Monday night, after we had talked, Mnuchin and Lighthizer came out and said, no, the Chinese really did try and jerk us around, in our opinion. I'm sure the Chinese don't view it that way. But, according to the United States, that was the way they felt. And with that is what really charged the volatility indexes and caused them to explode. And, I was, it was really surprising the way kind of things developed, right? We tanked, opened way down on Monday. Then we rallied back. Then Tuesday was the exact opposite, right? Opened flattish to up, and then everything exploded. And then it was just kind of churning our wheels. Yesterday got a little worse. And then, as the day, Intel had some bad news. But the price action today, nobody wanted volatility. Nobody wanted volatility protection. The peak of the VIX happened, and the spike index happened when Barclays came in and bought 2,800 puts expiring on Monday and 775 puts expiring on Wednesday. And they were doing this basically to hedge off their probably their double X risk. And then after that, it was basically straight up from there. And Apple's had a huge recovery, and like I said, I would be less than shocked if we end green on the day. And if you follow the paper this morning, I know we'll get into some of the screwy trades, but there was, the options markets in the volatility space, sans those two put orders I told you about, were fading the vol move all morning, even as things were exploding. Everyone, puts were primarily being sold in the SPY and the SPX, and calls were being sold in VIX, and puts being bought in VIX. It was really fascinating to watch.
You know, you're right. It is just a fascinating time. In fact, yesterday at that conference, I was doing a whole bunch of interesting conversations, as I want to do with a variety of people, including some volatility market makers out there and some market making shops, and they were all telling me off the record that they were prepping for something pretty dire today. They were planning for like a Brexit-style event of just moves of epic proportions in the underlying, moves of dramatic proportions in volatility, and just extreme aberrant scenarios. And we did see some moves, of course, today, but perhaps nowhere near to the degree that they were prepping and planning for. So there were a lot of people who were thinking today was going to be the day where kind of, they hit the nail and everything kind of fell apart. You know, seem like they're still kind of stuck on IP rights and a bunch of other things, which I don't know if China's ever really going to budge on. That's kind of like a cultural thing over there. Their view of IP is a different thing than we have it over here. And I know a lot of our tech companies don't like that. And so that's kind of a line in the sand. I don't know how they're going to cross that, and lots of other things. So it doesn't seem like, you're right, it doesn't seem like we're that close to a prospective end to the trade wars. I guess apparently, billions of dollars in new tariffs ain't that scary. Apparently, at the end of the day, if you look at what the market's pricing in, you can't. The bull can only be distracted. It can't be derailed at this point. It seems like, at least for now. If billions and billions of dollars in new tariffs, if an ongoing war between the world's largest economies, if that's not enough to derail the bull, then this bull is a rabid beast indeed. Shelley, like you mentioned, it's kind of been an interesting week. I know you wanted to come back from OIC and kind of relax a little bit, but the market did not allow such things, sir. What's catching your eye out there? What's it been like? You got the future under your belt, at least planning to be under your belt soon here, and you got looks like some more paper. Lighten it up a little bit in spikes. We'll get to that in a little bit. What's it been like kind of overseeing spikes and watching things unfold as we're seeing a massive resurgence and then fall off of volatility again, Shelley?
Now, there's obviously a lot of interest. There's been a lot of orders in the marketplace. Had more trades than we've seen in the past, still all retail size. But there's been a tremendous amount of talk with our members and prospective members about the future. We're very excited about partnering with the Minneapolis Grain Exchange, MJEX, on this project, working closely with them, their technology solution, and the CFTC on this project. That's been taking the majority of my time this week, and will take a lot of our time going forward. But as far as the market goes, market makers, they haven't tightened up a whole lot more since we last spoke. But they're all anticipating being able to tighten up a lot once the future's online. And we're excited. We're excited that there's a retail interest in the product, and that's the first step forward.
Yeah, folks are certainly discovering it, and a market where there actually is some volatility to be had. Not the worst thing to have a volatility product available in that type of market environment. But maybe really quickly, Shelley, we had John Smolin on the show last week, so I gave him a chance. I kind of want to give you a similar chance too. You guys are obviously deeply linked with planning and putting on the big OIC conference last week. It's a huge undertaking. People who've never been to it, who are outside the business, maybe don't realize how big of an event that is and how much planning, years worth of planning goes into that. So that was a lot to have on your desk, on top of launching a new product and a third exchange and everything else all around the same time. I definitely didn't envy your guys' schedules there. But maybe really quickly, I gave John the opportunity. Give us your thoughts really quickly. Looking back on the event now, how did it unfold? What were some of your takeaways from it? And how happy are you to have passed the hammer, sir?
Well, I'll answer the last question first. I'm thrilled to have passed the hammer. It's been a tremendous amount of work. It's about a 15 to 16-month effort. John Smolin and Dominique Pernetti and the rest of the team here did a great job putting it together. Fortunately, I was able to focus on running the business while most of this was going on. But it was a really good event. We were thrilled to have Blair Hull and Thomas Petterfee in for the panel that they sat on together that John hosted. I think there was a lot of interesting insights to the history of the market from that panel. We had some great speakers. All in all, very, very fun event. But I'm glad there's another 5 years before we have to do it again.
Exactly. I hear good things about the Hall of Fame awards as well. I hear people came from far and wide just to attend that event. Are you hearing that anecdotally as well there, Shelley, that was the main driver for everyone to attend the conference?
I am. There was a lot of people stayed for Friday, which has not been the case past several events.
Yeah, that was big.
We had two big things on Friday. We had the Hall of Fame. That was fun. It was great to see a lot of very deserving people be recognized for their hard work in the options industry since the early 70s. We had, again, the speaker, the Mooch, was fun to hear on Friday. And I think everybody had a really good time, and it was an event loaded with a lot of information and a lot of content.
So, hey, to get into this Hall of Fame, how many years do I have to be retired before you guys are going to formally admit me and Mark into the Hall of Fame?
The greasy meatball into the Hall of Fame. Might be a few years.
I mean,
I don't know.
I think it's a foregone conclusion. I'm like that's like saying Michael Jordan wasn't going to be a Hall of Famer in 1996.
It's exactly the same thing.
Landslide for you and I, Mark. That'll be fun. We'll go in together.
When's your flu game? When was that? I missed that moment. 50 points of the flu.
Yeah, well, it's nice that you and I, that you're my Scottie Pippen to my Michael Jordan.
Yes, that's exactly how it works. I may have an inside track. I do kind of host the thing. At least I did this year. So I may have an inside track. I may get there a few years ahead of you, but we'll see. We both have a long time before we need to consider lifetime achievement. I don't want anything like that anytime soon. I'm nowhere approaching that age. Give me a few decades first before you start throwing crazy things out there. But that was a fun event. All teasing aside, it was a great honor to host that. I had a ball. I did love. I said this on stage, and I'll say it again, Shelley. I did like seeing the industry broaden its focus a bit. For years, we've seen these awards go out. It's always one award every year. And typically, not always, but typically it's the exchange that puts it on, gives it to one of their, executives. And that's fine, but it's not. The options industry is way more than exchanges. And there's a lot going on out there. There's great brokers and traders and educators, people doing all sorts of cool things out there. And he had an entrepreneurial panel this year. So the focus of the event was a lot broader this year. And that was good. Despite some snide remarks in our chat here from one of your other presenters who said he had issues with my hosting style. I see you in there, Mr. Flowmaster. I know. I see what you're up to, and I choose to ignore you as we keep on. I heard bad. Let me just say, I heard bad things about the state of the industry, and I'll just leave it at that. All right, let's keep on rolling into the. Before we get derailed in OIC talk, let's get into the rest of this madness. Again, another reason why you can't prep for this show too far ahead of time, because it all becomes lies very quickly. We saw the VIX Cash, like I mentioned, threatening 20. Earlier today, and now coming into showtime, it is shy of the 17, actually back up over the 17 handle ever so briefly. Now back down again, flittering around that level. So off roughly 3 handles even from this morning. We saw VVIX coming into the show was a little bit north of 100. It was at 103. Right now off again as well, down to about 96.5. That's still well north of where it was. Of course, it's off of the highs it hit earlier this week. It hit 116 on Tuesday. If you follow the show, VVIX is kind of a bit of a predictable beast. When it gets in the lower end of its recent range around the 70 handle, chances are something's going to happen. Something's going to move. Some vol's going to come roaring back into the space. And when it gets north of 100, particularly around that 120 level, things are pretty elevated. Things are pretty rocking and rolling. And it probably won't stay there too long. Aberrant scenarios can happen, but it probably won't stay there too long, and it certainly didn't this week as well. It hit 116, and it kind of came right back down, despite the fact that we had some, shall we say, aggressive movements out there in the broad volatility. And, of course, coming into this morning, we saw the futures. I think the term scary backward, crazy backward, call it what you will, super backward. They were very, very backward. The cash was crazy, had crazy bid, I think was a technical term. To the futures. Coming into the show, it was about not quite 1.5, about 1.3 point discount from the front month future to the cash. That's how backward the cash was. And then it was about 1.5 points from 2 months to the cash. Now coming in about 20 odd minutes through the show here, and it's pretty much almost gone. The cash is lining up pretty nicely. It looks like about a quarter of a handle now from the cash premium to the front month future. So all of that juicy backwardation kind of vanishes. We have a listener question about this a little bit later. I'll save it for then, but spoiler alert, that's why the VIX curve inverting, not quite as big of a deal as, let's say, the yield curve inverting, something else along those lines. Let's get into the action out here this week. Actually, I was joking with Shelly before, but we are seeing, I think the resurgence of vol has been kind of good across the board for all the volatility products because we're seeing the OI spike up again, pun intended, in spikes. It's about 5x where it was this time last time, with not just that big vertical open out there now. We also have some downsides. You see people starting to play it like they do an actual volatility product, right? They ride it on the up, they ride it on the downside. We're seeing that unfolding out there in spikes right now. With that for a long time, it was that 2025 vertical that kind of dominated the top of the OI, and that was it. And now we're seeing the top of the OI actually being dominated by some puts, in particular the May 14 half puts. We're also seeing all May 14 puts and 19 puts up there in the top 5 there. So interesting action. Shelly, you don't even have the future yet, and things are starting to trickle in. Is this does this give you a warm fuzzy in the back of your neck, sir?
Well, it's certainly a warm fuzzy. It's going in the right direction. I'd love to see it accelerate, but we're going in the right direction.
Yeah, I was the same market makers I was talking to yesterday. I asked them specifically about this, and they said the same thing. A lot of people they want to start trading it and provide some tighter markets. They're waiting for the future. I think a lot of people are too. So I think just the fact that we're seeing any OI spiking again, pun intended, before the future, I think is probably a sign that there's definitely some latent interest. Yeah, the big trades out here this week out there in Spikes land were indeed the May 19 puts and the May 14 puts. The 19 puts going up for 260, I believe. And it looks like paper lifting the offer on those bad boys. And they actually weren't that wide. They're 240 at 260. So not outside, given how volatile things were this week, you might expect a little bit wider. And let's see, the 14 puts went up for 35 cents as well. Also on the offer on those bad boys. Surprisingly enough, on MyX. Go figure. and then moving on to VIX land. VIX, obviously, doing a little bit of paper today. A lot of still the ADV is kind of hovering around that 500,000 mark, and it was shy of it for quite some time. Which all those out there who are VIX watchers know that when it gets shy of that 500,000 mark, things are kind of light. Things are kind of usually you see that maybe in the summer doldrums period, excuse me, where things are typically seasonally quiet anyway in the volatility space. Seeing it now in April, before early May, before we really get rolling with the crazy summertime, I think that was a little concerning, a little maybe disconcerting to some people out there. Of course, this week kind of erasing that as we're seeing the vol and the ADV back up, and now it's back up not just north of 500,000, not just north of 500,000. It's back up north of 600,000, which is kind of where you would expect it to be around this time of the year, somewhere in the 600, 650 range. That's a healthy ADV for VIX options, and we're kind of flirting with that again. So I guess it only took the resumption of trade war to get these things lined up for us. And remember, listeners, when we were talking last time on the show, we were talking about how it was pretty much all calls all the time out there in VIX land. This week, that's the first time in a long time that has been the case. And this time, we're seeing now, let's look at here we go. Yeah, now there are still a lot of calls, but a healthy number of puts. Let's break it down, starting with, number 10 here, the May 18th. There's about 157,000 of those bad boys open. Number 9, the May 50s, $1.58 on the tape there. Number 8, our first put on the list, the May 15s with 163,000 open there. Number 7, the May 13s with 166,000. Number 6, the May 37 halves with 175,000 open. Number 5, the May 20s, $1.85. Number 4, the May 23. So still a healthy bit of May calls. May 23s, 203,000. Number 2, the May 22s with 220. Number, 3 here, the May 14 puts. So yeah, the final put on the list, but up to number 3. So a lot of downside action, as you probably would expect, given the back and forth whims of volatility this week with 231,000. Number 2, the May 27th, 432. Number 1, the May quarters, 568,000 open out there. So not quite the call palooza it was on our last show. A little bit of diversity out there, as you would expect, given this week's action. Let's break down this week's action. Mark, you kind of touched on it earlier in the show. What was lighting up your tape in terms of VIX and volatility options action this week, sir?
There are a lot of trades that went up, and almost all of it was bearish. I think you're going to notice that open interest in those puts, those downside puts, is pretty high. We saw a pretty decent-sized May 1614 put 1x2 go up. We also saw, this one was kind of interesting. It was the this one up today for size. It was the May 14, June 16 put 2.5x1. So they sold 2.5 of the May 14 puts to buy one 16 put. We also saw straight 16-14 put buying. We saw the 14 puts. We saw, just downside galore. In addition to that, there were call spread sellers. The 18-28. We saw the 23 call seller. Just, this vol today seemed toxic all day. And people spent the entire week positioning themselves for the vol to come off. And lo and behold, it did.
I like that. Volatility was toxic all day, so that's a good term for it. Because
you've heard of toxic masculinity. Now this is
toxic volatility.
Volatility, yeah.
No one wants to touch it. No one wants to be near it. That's pretty much what we saw. You're right. It was kind of a slew, a downside, a bearish fest. Call it what you will out here today. You mentioned a lot of the puts. It was puts lighting it up. May 15, 14 put spread going up for 22 cents. It looked like it was probably buying. It might have been closing because it went up also on Thursday. We'll get to that in a little bit. It looks like that trade went up at least almost 30,000 times just in one print here. It looks like they did it for about 22 cents. Again, that was in May 15, 14. So pretty tight put spreads. You also mentioned there's some verticals and ratios. There's no shortage of those in VIX Options land, listeners. We saw that again today. We saw the AUG 26.37.5, 1x5 call spread. Looks like they did it for, if they bought it, it's kind of weird. Looks like because both of them seem pretty biased towards the offer, so kind of hard at first blush, but looks like they probably bought it, in which case they did. It looks like for about a 76-cent credit, 84 cents on the one lot, I should say, the 26 calls by the 5 lot, of course, which is a 32 call, the 37.5 calls for 32 cents. Say all that 5 times fast. So interesting one by 5. How would you like to have that on? Short 1, long 5, listeners? We said it before. When you sell one and buy a ratio that far out, it doesn't really work that well. Again, there's other legs against this, obviously. So in totality, it can make a lot more sense. But on the options component alone, selling 1 and buying 5 that far apart, I'm not really down with that. I don't care what, and you got to pay a debit to do it on top of that. So yeah, I would. Let's hope they put it on the other way. And of course, you mentioned the June 16 puts lighting it up out there as well. Yesterday, we saw some puts paloozas there as well. Remember, yesterday was a similar day. Sell off, and then rally, and inverse of that in the vol, spike, and then come off a bit towards the end of the session. May 15, 14 put spread. Trading for size yesterday, too, which is why today's could have been closing, but if it is, he didn't really, he kind of scratched it. He did it for, looks like he did it for 20 cents yesterday and 22 cents today. Maybe today's trade was inspired by, I don't know. But if he did take it off today, it wasn't like it was a huge winner or anything, a whopping 2 cents. Maybe he's getting the heck out of Dodge while the getting is good. We'll have to see for what the OI, how the OI updates. By the way, you guys ask all the time about updating open interest intraday. I asked that to the CEO of OCC at OIC last week, so that's hitting the network soon. You can hear his answer for yourself about why that may or may not happen right now and what the prospects are for that in the future. All right, let's keep rolling here. May 15, 13, 1x2 put spread. That was a big one yesterday as well, going up for 16 cents, 15,000 by 30,000 times. Mark, we talk a lot about the verticals on the call side. Are you as much of a fan of the 1x2s, et cetera, on the put side, sir?
I think, first off, that 1x5, they were buying the 5. I can confirm that.
They were buying the 5.
They bought the 5. And then
how do you like it as a short 1, long 5?
Short 1, long 5. Well, that's a blowout trade,
yeah, that's right? Of course. Yeah,
that's hedging off some sort of variance trade or something like that.
Yeah, of course. It just on the core, on the face of it, not a fan.
Yeah, no, I mean, it's not a good for a retail trader, but if that's against the book, it probably I'm certain that it makes some sense. I do like these 1x2 bear verticals, especially when VVIX is high, especially when you're expecting some reversion. I love them when we're already low. Like if I can do like a 12-11 or a 13-12 1x2 for even money, things like that, I'll do those all day because you can manage the downside. when vol's a little higher, you have to be a little more aggressive on managing it. The thing that works to your favor is that as VVIX comes off, those way out of the money puts don't gain value, as the ones that are becoming in the money will pick up some value. So it can be a really nice trade if you manage the delta properly. So yeah, I am a fan of those downside trades.
Yeah, we don't see them light up as much. We have seen a little bit more of them, obviously, as we've seen more downside getting tested in the vol space. And so I think we're going to see more of these 1x2s. I'm waiting for the 1x6s on the put side, Mark. We haven't really seen those as much yet as on the call side.
That'll be fun.
In fact, spoiler alert, we had more of those on Wednesday, going up to Wednesday here. Again, it was a pretty busy week. All week here for the vol space, so we'll kind of get a good breath of it. Sometimes there's so much going on just on Friday, we can only focus on that, but we try to get the week's worth of action. And Wednesday was kind of all calls day, a lot of it anyway, including the big print that day, 1x6. So if you thought 1x5 was crazy, 1x6 out to October this time. Oct 2640, 6,000 by 36,000 times. Looks like they did it for maybe $1.17 credit of all the premium, how it all. That's the other thing with that 1x5, the premium usually lines up better if they're going to do it on those weird ratios. But I digress. I'll let go of that one. Listeners, if you're retail, don't do a trade like that. You got to have something crazy against that. And you probably don't have some variance in your back pocket. So you have no need for such a trade. But anyway, 2640, also another weird one. Also kind of if they are indeed. This one was opening at least on the 26s, which is interesting out there. The 40s, I guess, too much juice to tell. A lot of OI out there on the 40s in October, which is kind of interesting. Either way, how would you like that one, listeners? How would you like? Would you rather have long one, sell 6, or the other way around? Either way, pretty wide for the other way. But again, probably a similar trade to what we talked about earlier. And then on Tuesday, that wasn't enough for you. Tuesday, we saw just a straight up boring vertical, but done for some ridiculous size. We saw the May 25, 27 vertical go up for 14 cents, 90,000 times. So, just pick your poison. Tight verticals were tight verticals and ratios were the order of the day out here this week. Tight put spreads, tight call spread, trade up 1-to-1, and then you get into the ratios, things get wild and wonky and far afield out there, which is interesting, fascinating, all sorts of fun stuff. We could spend hours picking apart all the paper that went up this week, but we got to keep rolling into the product formerly known as VXXB, but we shall not say that name here anymore because we don't have to. The people spoke. We rose up and fought back, and the name has been changed now to VXX. Back up above the 30 handle this week. That's, of course, I know for a lot of you out there who are VXX watchers, that's kind of the level where you guys start to get really excited. I can just tell by your feedback and what you send to us. The 30 level is where you kind of like to watch this bad boy. That's where a lot of you like to line up your trading, usually biased to the downside, usually 30 puts, 29 puts, 28 puts, all that fun stuff. You guys like a lot of that. and so it's interesting to see. So we're back up about 30 to about 30.3 earlier this week. So again, that's about 5 points higher than what we saw last week. Mr. Meatball, I know your crazies out there like themselves some formerly known as VXXB. What was catching your eye out there this week, sir?
Exactly what you said. VXX, we had a backwardation. That means it's climbing in its favor. I had a couple days where it really exploded. It's getting more and more June, so it was a little more docile than like the May VIX future itself. But it was moving. There were no very kind of specific crazy trades that went up. I did see a broker kind of throwing out like a short VIX put versus long VXX put, which I found kind of an interesting trade-off. But that was, no particular orders popped up. But, it was busy, and we saw a lot of retail action, a lot of playing on both ends. Andrew was strangling and straddling VXX.
Yeah, he told us about his strangle, his VIX VXX strangle trade there.
Yeah, he was all over that thing.
Yeah, it's an interesting one. Actually, we're a bit shy. Looks like we're shy again of the 30 handle again, down to about 29. So for all of you who are looking to get in on that action, we're back down there a little bit again. Who knows? We can retrace again. So remember, we've said this before. If you guys like to play the dark side, we get it. But look at January. Look at other times when that 30 strike did not exactly come to fruition. So make sure you got something in your back pocket. We were just talking about strangles a couple seconds ago. Something in your back pocket. for when the trade war rears its ugly head again or something else happens. And next thing you know, we go roaring up to past 30, up to 40, and everything else again. So these things can happen and do. And you don't want to get caught holding the bag when they do. Speaking of holding the bag, let's see what people are holding out there right now in VXX land, the top 10 positions. Let's go to number 10 first. Let's start from the bottom. It was all calls for a while there. A lot of calls, puts coming back into fruition again, which is, again, another sign of where we are in the vol space right now. Talking earlier about people continuing to want to fade these spikes. And seeing that again this week, the May, number 10, the June 40s, I should say, 33,000. Number 9, the June 80s. Those have kind of been floating around there for a while. They've been pushed down a bit by more sane paper, but still the June 80s have been open for a bit. Number 8, the May 23 puts, 33,000 of those bad boys. Number 7, the May 69 calls, 34,000 of those. Number 6, June 22 puts, 35,000. Number 5, the May 22 puts, 35,000. I'm guessing maybe that was your put spread. You were talking about the VIX versus, or a VXX monthly put spread at the very least, because the OI, close enough, strikes close enough. I'm guessing there was a bit of a time spread going up there. Number 4, the June 45s, 35,000. Number 3, the June 50s, 38,000. Number 2, we got 2 puts at the top 10 again, which is kind of back to old school VXX again. 38, almost 39,000 of the May 27 puts. And number 1, with a bullet, the June 24 puts, 41,000 of those bad boys. Total of about 2.25 million contracts open. Almost pretty even, pretty close to calls and puts. A little bit more calls and puts, but not a ton more. About 1.15 on the calls and about 1.1 on the puts, really. So not a huge bias either way, but seeing puts coming back today, as you might expect. The 30 strike is the trade du jour. May 30 puts, the big print out there, going up for $1.90, 3,000 times. These are actually on the bid, though. Again, all this good analysis data coming courtesy of our friend over there who so maligned the State of the Industry panel, Mr. Schwartz. Check out his conversation with me on the network coming soon as well. Hitting the bid there for $1.90. So maybe this is opening though too. So maybe some people drawing a line in the sand here on the May 30 strike, which is interesting. Don't see that too often out here in VXX land. Yesterday, talking about ratio put spreads is exactly what we saw in VXX. Yesterday, again, another big mover for volatility was the June 24, 26, 1x2 put spread. 9,000 of the 26 puts are 68 cents versus 18,000 of the 24 puts for 30 cents, as the Irish say. So doing it for a whopping 8 cents there. Pretty much exactly midpoint on all of that. So it's a pick 'em as to which way they went, but it was opening at least on the 26 puts. So interesting. How would you like to have the 1x2 there, listeners? Think about that for a little bit as we keep on rolling. Let's get to before we get to your mail. Really quickly here, Shelley. There's an interesting white paper, and they posted an article about it. I believe it was on Investors Alley, a guy named Jay Soloff. I'm not familiar with him and his work, so I can't speak to the veracity of some of his claims here. But what he does talk about later on in the paper, which is kind of interesting, he kind of breaks down a paper that Dr. Peter Carr wrote about spikes and kind of spikes versus VIX and kind of some of the interesting nuances therein. I'll just pull a couple of these here, which is kind of what we've talked about on the show before. For the most part, they line up fairly closely. There's a couple of moments when that diverges, and that comes around kind of the core differences in the underlying contract. I remember one's on SPY, one's on SPX. What's the difference in those two? Well, aside from size, you got the dividend on SPY, and that's pretty much what Professor Carr found here in his work. He said, look, from 2005 to 2018, the difference between the two was pretty much negligible. So he said from a longer-term perspective, you could have used them primarily interchangeably. In the shorter term, he did see some differences around that quarterly dividend date in SPY. Again, that early exercise bit of juice that comes in as a result of trying to capture that dividend and the early exercise premium, because, again, SPY, American exercise. So that does cause a little bit more vol in the spikes in those moments. That gives you a little bit of a little bit of a premium, maybe to play with in those moments, which is kind of interesting. Not huge, but maybe something worthy of note. So yeah, Shelley, I'm sure you saw this paper. What are your thoughts on its kind of conclusions and some of the interesting maybe use cases and opportunities it points out, trading between VIX and spikes?
His conclusions are very much in line with what we expected and what Simon had already shared with us. Certainly the American style aspect of SPY, as well as the dividend, has some level of impact. the dividend itself, the fact that SPY carries some cash, that cash has obviously no vol, so it does take the vol down in the underlying product a wee bit. But what Professor Carr found is as long as interest rates and dividends are below 10%, there's virtually no difference between the two products. Also, that dividend premium is primarily carried in the money options, and being that our calculation is done solely in the at and out of the money options, there's a much smaller impact than one might think.
Yeah, that's true.
Yeah, there was one other piece that was kind of interesting. And I maybe this used to be the case. I don't know if it still is, but didn't SPY traditionally have a slightly steeper skew than the index options themselves, and that might amount for some of the differences between spikes and VIX itself, or am I telling tales outside of school?
I don't have enough history to be able to answer that question, but I think the truncation addresses some of that. The fact that we truncate on the second option, SPY option, that's worth a nickel or less, which would be equivalent of a 50-cent option in the SPX, where the truncation for the VIX happens at the second zero bid option. So I would argue that the fact that the VIX uses a lot more of the tail can cause an impact to the upside in the VIX calculation.
Interesting stuff. A lot of interesting. I encourage you to check it out for yourself. Listeners, check out the white paper. Peter Carr is the author there. You could read all those conclusions for yourself. You don't need to have them filtered through us unless you like to. Of course, we're happy to oblige. We're also happy to oblige a couple of your questions. We've got a little bit of time. Let's keep on rolling into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, there, of course, were a lot of earnings this week. You can check out all the earnings move results reports, courtesy of our buddies over there at ORATS at The Options, the brand spanking new, I should have mentioned, theoptionsinsider.com. Still making sure all the bells the bells and whistles are working behind the scenes. We're getting there. Not quite all there yet, but it's getting there. So check out the new coat of paint if you haven't done so over there. Of course, the big news today, outside of earnings, Uber going public, terrible timing. One of the worst days I can think of in recent history to go. But pick a tranquil, quiet day in the market, not when you're all the news, not when everything else is melting down around your ears. They were very cautious. They priced it at the low end of their range, around 45. I was pretty much at the bottom of that range, and then it broke through that. It dropped 6.5% right after opening. So pretty much broke effectively the IPO at that point. It seems like it has rallied back since then. It's up to about 43.78. Obviously, no options there. We'll probably have to wait a week or so for those, but a lot of vol in the underlying right there. And I'm sure if the lift options activity has, been any example, there's a continuing interest in this space, and I would expect Uber options to deliver, the same level of interest. Let's go out here. We asked you guys this week, our question of the week, because it's kind of short-lived. We asked you guys going into yesterday pretty much. At the time, VIX Cash and Spikes had both spiked over 20 to around 22. So we asked you quite simply, where do you think they'll close next Friday? We wanted to give you a full week to see if that, if you thought this premium was here to stay or not. Spoiler alert, it's not. We gave you four choices, 21 to 23, which is right about where it was. A little bit higher, so north of 23. A little bit lower, so in the 19 to 21 range, and still lower, shy of 19. And it's still active, but the poll was pretty much really done yesterday once we saw the vol just collapse in on itself as a result. Right now, VIX and Spikes both at about 17.25. So we're outside of that range. We're in the still lower, and that's not quite winning. It was 19 to 21 with about half the votes is winning right now. 33% for still lower, 20% actually for higher, north of 23. So you got a week, but I think effectively this poll, we've seen the market dictate the answer. Again, that's why it's a challenge sometimes to talk a little bit longer term when it comes to volatility. Speaking of that, let's see what you guys have on your brains. Super Dragon. I like that handle. Super Dragon. Maybe someone's been watching some Game of Thrones of late. I know I haven't. No spoilers, please. I haven't caught up yet. All right. Super Dragon wants to know, is the VIX curve inverting as bad as the, Mark, as bad as the yield curve inverting? Mark, I've seen several screeds about this of late. VIX curve inversion. And they're kind of playing it up like it is the same thing as the yield curve inverting. Spoiler again, it is not. The yield curve inverting is like, once a decade or so kind of thing, a couple times a decade maybe. The VIX curve inverts, it could be a random Tuesday. It could invert for a little bit. So it's nowhere near the same thing. Mark, explain to Super Dragon why they are not the same thing at all.
Yeah, so the yield curve inverting implies that, there is potentially some stressors on the economy that'll cause the Fed to lower rates in the near term and tends to point toward a recession, right, which is more of a macro type of event economy-wide, whereas the VIX curve inverting basically points toward near-dated stress on the equity markets and points toward near-dated negative returns on the horizon for the S&P, but does not point toward any kind of long-term macro effect on the economy.
All right, let's see here. We got time for one more. Let's go for a fun old school one. Shelley, this is probably up your wheelhouse, given the fact that you spent some time on the floor. You probably heard this term. It comes from Anthony Johnston. He's asking, I've heard you guys call out-of-the-money puts bullets before. Where does this come from, and why are they called that? Shelley, we used to call them back on the floor of the CBO. Did you used to call those out-of-the-money puts kind of bullets? Do you know what he was referring to? And if so, do you know why you call them that?
My reference to the term bullets often was to the married puts, buying puts and buying stock to give me stock to sell long in case of a down move in the market. But certainly having bullets in your belt into a sell-off and having the ability to sell vol as vol is exploding, that's probably the original source of the term.
Yeah, that's kind of how I came to know it.
Yeah.
And, you want to have those moments, listeners. You talk about not being net short units here on the show. One of the first things at least they used to beat into your head as a new market maker was don't get caught net short units, particularly to the downside. These kind of things can just erupt. The vol explodes, obviously, when you move to the downside in an unexpected fashion. If you get caught net short units down there, the term was you want to have some bullets in the gun so you could fire them at those opportune moments when they are really juicy and really worth firing. And so that's kind of how it was conveyed to me, and that certainly is how it played out. I have vivid memories of this playing out exactly like this. Back when Intel melted down around my ears when I was out there, and having some of those bullets in the gun there, it was a very nice feeling. Let's just put it that way. You could sell them at levels that are just unheard of. When everyone in the world's coming to you for that insurance, it's nice to have some to sell. Mark, is that kind of your takeaway as well?
Yeah, we'd call them units, bullets, same thing. I can remember, and Shelley, this is probably one of his contemporaries. There was a guy at I think it was a firm. And what they would do is they'd go around expiration Thursday, so the day before expiration, and they would try and find every little way out of the money teeny that's still out of bid and walk around and sell it. And that was the primary strategy they focused on. And they made a ton of money until 1987. And that the way that happened, they, with the timing of that, they ended up getting themselves into some sort of huge trouble because they were they were selling bullets to loaded guns, and hoping they wouldn't go off. And then one day it did. I don't know if you remember that story, Shelley, but
were you around at that time?
I was not, but I heard the stories from some guys that were.
Yeah, I'm not going to name names, but he'd walk around in his plaid sport coat.
It ended up not going well for him in the end.
Yeah, there were a few guys.
87, a lot of things didn't go well in land for a lot of people, unfortunately.
Correct.
There were still a few guys doing that when I got out into the SPX in the mid to late 90s. So it wasn't. It was a trading strategy that died hard. Those guys tended to change jackets, shall we say, every few months. The strategy stayed the same, but they had to change backers about once a year or so. That seemed to be the frequency with how quickly they eventually would blow out. These days, probably a lot more frequently. All right, great questions all. Let's keep on rolling to the final part of the show. It's time to go into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. We haven't had a chance to really gather around the old Crystal Ball in a while. Of course, last week we were all down. We actually had a chance. It was great to have a chance to be actually in the room face-to-face with Simon for a change. That was kind of fun. We're not in the same time zone very often, let alone in the same room. So that was fun. We didn't get a chance to do the old traditional Crystal Ball. So we have no particular winners for this week. I don't think any of us would have been at this level candidly anyway, so I don't know if he would have had a winner this week. So, Mark, I will be the charitable host. We're seeing VIX Cash around a 17, spikes around 17 and a quarter. Do you want to go first, or do you want me to do the heavy lifting for you?
Oh, I'll go first.
All right, fine. Go for it.
All right. I'm going to say that this is all going to be, this whole hullabaloo is going to play itself out by Tuesday. So, you know, they're already crushing vol. We're sitting 75. I'm going to go 1406.
Interesting. 1406. So, see, you didn't have a print from last week that you could copy. So it forced
I didn't.
It forced you to delve into the old toolbox a little.
Actually,
bit.
come up with something.
I may have to strip you of last week's picks every week just to make you dig in a little bit. So 1406. Interesting. I kind of figured you'd be on that route. I thought you might be a little bit more aggressive. So let's see. We're right around a 17 in both products right now, listeners. So looking at here a week from now, I like where you're looking, Mr. Meatball. I'm gonna be. Tell you what, I'm gonna be even more fun. Usually, I thought, you know, we're gonna have a little bit more of a meltdown, but this time, tell you what, I like this. I think we're going to see it be done, and it could quite possibly be done. So let's go here. I'm vacillating between two. I'm going to come down on this side of the fence, which is a long way around to saying I'm going to be at 13 and a quarter this time next week. So a lot of erosion, but hell, we just saw that many points come off almost in a couple of hours. So granted, it's a longer trip from 17 to 13. But still, and I would not be surprised if it's around 15 instead. I was kind of vacillating on that a little bit because we see, you know, of course, or even around Meatball's level, just because we have seen crazier heads prevail out there sometimes. But for now, I'm going to go out on a limb. I'm going to be the reverse Russell for this episode. And I'm going to say we're going to see some good, healthy, tasty erosion out there this week. All right, there it is. Better late than never there. All right, here we go. That music, unfortunately, means we are at the end of this fine and fun program. Listeners, I hope you enjoyed our tour through the week that was a pretty crazy week from a volatility perspective. I haven't had one of these on the books in a while, so it's kind of nice to sink our teeth once again into a nice, meaty one. But before we go, let's go back around the horn. Let's start with you, Shelley. If our listeners out there are intrigued, they want to learn more about spikes, maybe they have, I think we had a question about the future. I guess we'll have to get to that next week, sir. But they want to learn more about what you guys have coming up. Where should they go? What should they do, sir?
VXOptions.com. Click on spikes. There's plenty of documentation there, description of the product, the white paper, if you'd like to read Dr. Peter Carr's white paper, fee schedules, and anything else you ever wanted to know about spikes.
There you go, VIXOptions.com. And you can go to /spikes, of course, for all of that good stuff. A fun little video over there, too. Check it out if you haven't done so already. Kind of breaks down everything you need to know about spikes in a couple of minutes. It's pretty nice and concise. And nice and concise is not what I call him, but you might want to see him when he comes to his event in about a month. Mr. Meatball, what's cooking in your big volatility summit, sir?
Yeah, we are at basically capacity for our VIP portion that includes the fabulous steak dinner and live show with me and Mark. But if you're an Option Insider person, I might be able to squeeze you in. But there's plenty of room in the general audience for our Option Pit Pro Trader Summit. Just go to optionpit.com for details. We cannot wait to see you. Get yourself signed up and come and have steak or drinks or a Cubs game on me.
Yes, those of us in the know, we don't really call it the Volatility Summit. We call it the Steak Summit, courtesy of the Meatball, because it is a delicious steak. It could just be, it could be a frozen steak from the freezer. If it's on the meatball, it tastes delicious. That's why. So check it out, optionpit.com to learn more. And on behalf of the Meatball and Shelly and everybody else out there, Simon, John, let's even throw the Rock Lobster in there. Everybody, we wish them all well in the volatility space. And interesting, we'll see what the week has in store for us. Should be a fun one. And we'll see you back here next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.